I see you as a realist with a conscience. I just thought about that. And you watch Larry, you probably watch McMaster too.
Good.
That was the first time I heard someone say, for Larry, ESG, if you're going to do it, the part of the G might be genocide. Might not be a great thing to be in there, not just governance. And I thought that was a really good sort of, to use ESG, you're going to be, dealing with all these other things, but perfectly willing to go to the biggest polluter in the world, put all your investments in China, deal with them and look the other way for genocide and everything else. What should American businesses be doing in terms of a country that might take over Taiwan in 2 years and is getting increasingly aggressive in a lot of different parts of the world? Do you have an opinion on that?
Yeah, when I asked myself and my team, we just had our LP conferences for our funds, and we just closed a $10 billion fund, which we have $100 billion in assets under management today. So we're not investors directly in China. I tend not to. It's not a China thing so much as countries where we feel like the deck is stacked or we can't underwrite the political risk of the investment. It's just why bother? For multinationals in the United States, the interest in the Chinese consumer is extraordinary. I mean, the growth of the middle class and the ability to buy product. It is the fastest growing, most important consumer country in the world. And that's why you see all these companies sort of not knowing what to do, because it is their growth engine for many companies. So I think, I do think Taiwan is the 800-pound gorilla in the room. I think not only, obviously, would they take advantage of this administration and what they saw in Afghanistan, but also, we're not going to go to physical war, but we go to trade war. That will hurt us, those $600 billion in trades import from China that Larry mentioned. When you cut off $600 billion of couches and TVs, and then Taiwan produces all the chips, as you know, I've heard it in your show before. So, I mean, it would be strategically a nightmare for the United States. I hope our Secretary of Commerce, who I heard on your show the other day, actually races to figure out how to produce semiconductors will be more important than oil for this country. So we need to build a national backup plan. Forget about oil reserves. We need a semiconductor reserve, because your washing machine will stop working. So I think it's a serious issue. I think that is the canary in the coal mine. That is really the risk to the equity markets, because we will most likely start with a sanction, global sanctions against China, which could, they think in 100-year intervals. We have investors that buy companies for weeks, not even months. So, they will wait us out. I mean, this is their dynasties, and we don't organize ourselves like that. We'll throw CEOs out if they miss earnings on a quarter. So, they have a huge competitive advantage. It happens to be right next to them. And, I know Japan is obviously incredibly concerned. And we ought to be concerned, and this is above my pay grade, but it is something that definitely worries me a lot about how to end what is a fueled rally based on liquidity globally. I mean, there's so much money chasing, property values, going back to real estate. Property values are soaring across in almost every asset class. Cap rates are falling, yields are coming down. And capital is chasing property because it's in a form of yield. And it's not just a U.S. phenomenon, it's around the world. People are looking for yield, safe yield. And if you think inflation's coming, and real estate's a great place to put your capital for a while, because construction costs or new products cost so much more to build than the existing stock. So it's a very attractive asset class at the moment. I love my boring industry.